Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free video report for Thursday, May 5th, 2016. I wanted to get this out a little bit earlier, but things were a little bit hectic, so let's get started. At Sentiment Timing, we believe that human beings in the markets are irrational, and there's always going to be an irrational element at work, and that's what creates market opportunities. And we find these opportunities through Woody Dorsey's proprietary sentiment data polling, to find out how traders, investors are feeling. Are they bullish or bearish on the markets? And typically when you get extreme bullish readings, if things are lining up, you start looking for some type of top. And when they're extreme bearish, you start looking for a low. Now, the sentiment has to be interpreted, and that's really what Woody does, because it doesn't automatically mean, short if sentiment is high and buy if sentiment is low. And that's what he's been doing this for over 35 years, so I let him do all the interpreting as far as what the sentiment means. But on top of that, we also we have his technical turn dates, and those are reversal dates. So they project when to expect a reversal to hit. So we match that up with sentiment as well as when the turn date is, and then we have our technical analysis to see if it's backing up what the projections are looking for, and are there bullish or bearish divergences, and where the turn may take place. So we're not going to be 100% correct, and nobody is. But what happens is, even when there's a turn or something that doesn't say go accordingly or as planned, it's picked up on real quick. And it doesn't mean, if the market is heading higher and it was supposed to reverse lower, it doesn't mean that the uptrend is safe anymore. It just means that that turn date didn't go, and then we just look at the next turn date or a reversal date, and that's usually when things take place. But it's so even if something doesn't work, it's you're going to know throughout the whole time period whether it's safe to be just following the trend, which most people on TV, that's all they do, because when the S&P was at the 2115, they were all talking about 2,500, 2,600, and now you don't hear them anymore. So they follow things at the top, and then when things are at the lows, they get very bearish on the markets. And we're really going to just guide you through those things. And as much as everybody wants to get these big turns, and you can see we're still missing this whole part of the chart. I didn't even add this. But I mean, some of the turns that have been predicted are huge, and we all want those, but things are going to get sloppy. And typically they get sloppy on the uptrends because things just continue in one direction. But you pick up on it, and then when the trend ends, you get some, massive pullbacks, and they're usually right on the dates that that Woody is projecting. So when everybody is bullish on the market, you see the euphoria. That's really when you want to be cautious, because nobody's really expecting anything to go down, and usually news follows, but they don't start picking up on it until they're into fear or depression. And then when everybody capitulates, that's when you want to start looking for a low. And these cycles just continue to repeat over and over again. So we had a couple reversal dates that were towards the end of March and then beginning of April. They didn't work out, but we knew back going on to April 5th that the next turn was going to come near the 22nd of April. So you knew, even though it was going up, you could have done scalp trades or whatever, but the top was supposed to be coming someplace in this area here. So it wasn't safe, even though the market was continuing higher and grinding higher. It didn't make things, safe up here, because we knew that we had, this is the 20th right here, that we were looking for the 22nd-ish. So that kind of, I say, qualifies as an if 2 days before. But so we knew we had a turn coming. We also knew that you had massive bullish sentiment readings, so everybody was on board for the market to continue higher, and it was going right into the reversal date with bearish divergences, and from there we've seen things collapse. So it was right at resistance lines right here, and we have the bearish divergences with the SMI that's very, very still overbought right now. So I'm anticipating that we are going to get some buyers that are going to come in this area, whether it starts tomorrow or maybe on Monday. But really, the main reason is, one, we've had a pretty good drop, and you can see people are starting to get very, very bearish on these markets here. But if we look at what happened with the intermediate term, this just dropped right off the cliff right here. That doesn't mean that things are bullish. When sentiment turns that quickly, it means that things were on edge. So we know that we had a series of bullish sentiments up here, and we are looking for the turn here. And now we're getting some bearish sentiment readings, and Woody was looking for, we're looking for some type of bounce. And really, the main reason for that bounce that I'm anticipating it is, we're at some support right here. If it doesn't hold this, then we may see some buyers step in at 2036, or it may come all the way down to 2019. But in this area, I think if you buy, it could be okay, but it's going to be just a quick trade, because the overall trend is still down, and it's been down really for quite some time, because we've been making lower highs and lower lows. So even though we had this big move right here, it's still part of an overall downtrending market. And even though we're expecting a bounce, it's going to be, the problem with when the markets are heading down is that fear is much stronger than greed. So if we start taking out some of these support levels, you get into a panic move. But the fact that we have bullish divergences on the 60-minute chart, and we're also near some support, and we also have this bullish wedge, my guess is we're going to see a bounce that's going to come someplace between, let's say, the 2070, and it could go as high as 2085, may even stretch all the way to 2096. But this is going to be your reflex bounce, and from there we are probably going to continue the move down. And really, I believe that the targets are going to be anywhere between 1960 and 1874. So short term, I'm anticipating that we're going to get some kind of bounce. Whether it happens here or not, we'll have to wait and see. But once it does find a low, we're going to get a decent little, say, counter trend rally. Once that completes, we're going to be heading down, and that's going to be going into our next turn date, because we already know when the low should be coming in place. So you know how to manage your trades going into that next reversal date. And most likely what's going to happen is we're going to see a series of bearish sentiment readings. And also what will probably happen during that time is we're going to see our technical indicators start to burn off some of this oversold readings. So again, up and then down, and it's probably going to be going right into our next reversal date. You really need to know when these dates are, because that's how you start positioning your portfolio ahead of time. Because as you've seen, these markets, when they turn fast. They don't give you a chance to get out. So anyway, that's about all I have for tonight. I'm still doing the free memberships for MarketsPath. Anybody that signs up for Sentiment Timing, you automatically get put into our MarketsPath membership. I do these kinds of videos each night, so you get an idea. I do some morning notes, and we also have a trade room. So if you guys are interested in signing up, we're still allowing on that. And I do believe we have a special. Just click on the link that's in the email. Have a great Cinco de Mayo, and until next week, safe trading.